Welcome to the Anakazi Online Banking Conversation, Episode 9. Our topic today is competition and consumer rights during COVID-19. We are pleased to have our guest, Mr. Chilufya Sampa, who's the Executive Director of the CCPC. My name is Walubita Luwabelwa. I'm the Chief Compliance Officer of Stanbic Bank Zambia Limited. Mr. Sampa, welcome. Mr. Sampa, welcome.
Thank you very much, and thank you for having me.
It's always a pleasure to have you. Now, Mr. Sampa, as we've already explained to the viewers, you are the head of the CCPC. Tell us a little about the commission, when it was established, and what is its role?
Okay, the CCPC, which is the acronym for Competition and Consumer Protection Commission, was established in 1997. This is after an Act of Parliament was passed in 1994. It was called the Competition and Fair Trading Act. That was the first act. That established the CCPC. Later on in 2010, it was changed to Competition and Consumer Protection Act, and that's what created the CCPC. So what is its role? Its role really is to regulate markets. If you go back in history, you'll notice that we had a command economy before the 1991 elections, when we came in with a free market economy. The command economy did not require an institution such as ours, because the economy was basically held in the hands of government. But when we moved to a private sector-led economy, you needed to have a regulator that would ensure that the private sector do not take advantage of the consumers or even of the regulations. And as a result, what you have is a CCPC, which is there to regulate competition and also to ensure that consumers are protected from traders.
Very informative. Now, how has been your experience during this COVID period? I mean, as an individual and as the members of staff, what has been the experience?
The experience has been quite different in that personally, I have been working throughout.
Is it?
That is because immediately you have an emergency such as the COVID-19. What you see is that some traders, unscrupulous traders, want to take advantage of the situation. So it has sort of forced us to carry out more inspections to ensure that the products that are on the shelves, the products that people are buying are safe. It has forced us to ensure that people took advantage of the shortages that were there. So you saw a spike in the prices. So you wanted to ensure that those price increases were not as a result of just people taking advantage of the situation, but because of economic factors. So that is what has happened on the competition side. Personally, in terms of my children being at home, that was good. We tended to interact more and having, helping them to do their homework, which I doubt I did a good job, because I think I can fail my grade 7 now. The syllabuses have changed so much, but it gave me an insight of what they are doing and what they are learning much better than before.
That's very interesting. Let me latch on to that issue that you raised about excessive pricing. Yeah. And I'm sure it's a concept that probably we've heard it in other circles, price gouging and just excessive pricing. How was the experience? What were the results of your investigations, and what did the commission do about it?
You see, excessive pricing falls in the realm of what we call abuse of dominance. What actually happened is a bit different, because for you to actually find someone to have abused their dominance, they need to be in a dominant position of market power. Now, to be in a dominant position of market power, it means you need to have a market share of at least 30%, or 3 companies put together, what we call collective dominance, having a market share of about 60%. Now, what you saw in the crisis is, for example, pharmacies increasing the prices of hand sanitizer or hand wash. And that becomes a bit difficult because pharmacies are so many in the city of Lusaka. If I take Lusaka as a market, there are so many in the city of Lusaka. So it becomes a bit difficult to actually say this is abuse of dominance, because the way abuse of dominance works is that when you are in a dominant position and you are able to exercise what we call market power, you can act independent of your customers, your competitors, and anyone else, even your stakeholders. And the only way you can sort of deal with that in competition is to have other competing companies. But in this case, there are so many, and they all have little market shares. So we then realized that actually our act wasn't well equipped to deal with this crisis in terms of that price gouge. So what we did was to engage with our ministry, the Ministry of Commerce, Trade and Industry, and we suggested some changes to our legislation. And not just our legislation, but even on the Sale of Goods Act, there is a provision where you can maybe pass an SI, which would have then allowed us to deal with the case. Fortunately enough, before we did send out warnings, warning letters, and in the press as well, but we have seen that things seem to have come to normal.
Interesting. Others would have argued to say, couldn't you have used general powers, for instance, and collusion or cartel behavior away from dominance to deal with such a situation?
Well, because you see, because then the issue would have been excessive pricing. Excessive pricing falls under the provisions of abuse of dominance. So that could not have been the case. When we go to catalytic behavior, then now we needed to prove, because catalytic behavior is criminalized. And because it is criminalized, then we need to prove beyond reasonable doubt. And you know that is a very high standard. It would have been difficult for us to actually prove that these pharmacies had agreed. Let me just put it that this is a crisis. It is unprecedented. It has never happened before. Competition authorities all over were grappling to deal with it. Those that did, I know like the Kenyan authority dealt with something like that. I think the South African authority dealt with that. But those were relying on their legislation, which already provided for such things. One of the provisions that both the South African and the Kenyan authorities relied on is what is known as unconscionable conduct. And that is the provision that they used. For us, we don't have that provision within our act, and so we couldn't use that.
Interesting, but it's good to hear something is being done. We also noticed you released some guidance notes on phishing online services to clients during this COVID-19 period. Please shed more light on that issue.
Yes, so you see, the way COVID affected the consumers was that with the lockdown, not many people there was this basically people were discouraged to go and physically go and buy certain things. And of course, what the consumers now did was to start relying on online purchases. We saw that. We saw an increase of people actually going online and trying to use the virtual and online purchases and dealing more with the internet. And what we started seeing now was that people started taking advantage of the fact that a lot more people were using the online services, and then people would come up with scams to defraud consumers. COVID-19 emergency fund, so to speak. If you do ABCD, you send us our bank details, we'll send you some money. And then consumers, some of course fell for it and others were skeptical. So we felt we needed to sort of educate them well in advance to ensure that they do not fall prey to these scams. And this is why we started issuing those guidelines.
That's very interesting. Let's move away from the consumer a bit. Let's look at the market players.
Yes.
We saw the central bank coming up with a package, a relief package.
Yes.
Were there any interventions for the market players from your commission?
From the commission side, we realized that a lot of businesses lost cash flow income because with the president's measures and the Ministry of Health measures, we saw, especially in the tourism sector, a lot of cancellations. Weddings, kitchen parties were cancelled. Workshops were cancelled. You are a lawyer. Laz was supposed to have had its annual general meeting, I think. That was cancelled. The accountants, that was cancelled. So a lot of these events that would ordinarily take place were cancelled. So we knew that the businesses didn't have a lot of money because they were expecting these monies, but they did not get the monies. So what we did is that if a business, has violated the Competition Act in one way or the other, we were then amenable to say, okay, fine, you can pay in installments. We are giving them a moratorium of engaging with us and suggesting how they would pay over a period of time. Some would suggest 3 months, others would suggest more than 3 months, and so on, and would be alive to the fact that yes, businesses are not doing well at the moment. Then also, when you look at the consumers and the way they're dealing with the traders, you've cancelled your wedding and you've paid a deposit at this particular hotel or whatever it may be, events manager or something like that. And of course, the consumer would want to get back the money as quickly as possible. So we would want to see a win-win situation because we know that the business is in dire stress. Their cash flow is not as good as it was because of all these bans, and would engage. We'll be arbiters and we'll try and engage and say, look, they are not. It's not that they don't want to pay you. It's just that they are currently having cash flow problems as a result of the COVID-19. So maybe you can give them a little bit more time for them to pay you back your money.
Would you have instead wanted to issue specific COVID-19 relief guidelines, if there were none that were issued?
Well, when we looked at our act, we felt there was really no reason, if apart from ensuring that the traders' cash flow and taking that into consideration, we saw no real reason why we would give relief to catalytic behavior, for example, which serves no one apart from the people in a cartel. We saw really no reason to give any guidelines in maybe abuse of dominance, because this is something that somebody would have, it's almost predetermined. You know exactly what you want to do. So we really looked at our acts and said, okay, how is it that we can help the industry? And we found that the only way was either you use our current leniency program, our settlement program, or the consent agreement. You can use those, and as well as deferring payment of fines that may be there.
That's interesting. There's a particular area where we seem to have noticed some relief given by the Commission on mergers and acquisitions. From your last statistics, we've seen you mention something like you had about $38 million investment, yes, from mergers and acquisitions, year, yes, 2019.
Yeah.
You reduced some fees in that area. How has been the impact?
No, not necessarily that we reduced the fees. We were considering reducing the fees of merger notification. This is something that has been that has to change with a statutory instrument. The Ministry of Commerce, the Minister of Commerce, Trade and Industry has to sign that statutory instrument. But it is a proposal. our intention is to ensure that when you're carrying out a merger, it should not be burdensome. Currently, I think Zambia's merger fees are the highest in the world. With a couple of 5 million kwacha, that is about maybe $250,000. But before the kwacha had lost its value, it was close to $500,000. That was the cap. But now we are basically saying, why don't we ensure that we reduce the cost of doing business by reducing the merger notification fees? And so there is a proposal that has gone to the Ministry of Commerce, Trade and Industry. It has not taken effect yet. Yeah, so that's where we are.
Now that is something I'm sure the industry will be waiting patiently for. Let me take you back a bit to the complaints that you received. Your last reports show you received north of about 2,000 complaints in 2019. Yes. Tell us some of the themes that usually come out from consumers.
Yes, you see, with the consumers, what we have noticed is that there is a lot of Section 49 violations, and that is to do with unfit products or defective products. This is a lot of electronic products, telephones, refrigerators, and we have come up with an understanding that that is because most of our Zambian standards are not mandatory standards. So this is something that ourselves, Zambia Bureau of Standards and Zambia Compulsory Standards Authority are trying to work out to ensure that we have a lot more of these national standards applying on the Zambian market. So the majority, probably 40 to 50% of those cases would fall in that category. Then we have, unfortunately, the financial sector. The financial sector, but within the financial sector, I'll pick out the insurance sector. The insurance sector has a lot of cases as well. And this is our investigations have come out to be that it's as a result of using agents. And these agents would have a commission as part of their salary. So what they do is they go out into the rural areas, especially, mostly civil servants. They'll deal with these civil servants. So they'll come to you, Mr. Luwabelwa, what is your name? And they'll get all these details and so on. Then, of course, you tell me that I'm not ready for that policy yet. But then I'll say, look, for me to calculate your premium, let me just have your details, and I will not pass it when I go back to the office. And usually, almost always, what happens is they go and submit your details and say, Mr. Luwabelwa has decided to take up this policy. So the next thing you see is just a reduction in your salary, and you're wondering, where is this from? And then you remember that you spoke to one agent or the other, and he did not, and you did not give him the permission to go ahead, but he's gone ahead anyway. Then there are also situations where you deal with me, with one insurance company A. Then I'm fired from this insurance company A. I go to insurance company B. I still have your details. So I go to the insurance company B and give them the details like you have joined them. So the next thing you see is a deduction on your pay slip. So there are a lot of those insurance cases. PIA, I know, is coming up with some guidelines on how these agents will be dealt with. But those were the two major: defective products or the retail sector, and the next was the financial sector.
Let me bring you to the financial sector, of course, which is something of personal interest.
Yes.
And we have dealt on several fora when we deal with bank assurance and other blended services. Yes. So would you say there is now more enlightenment to the consumer and to the commission on how bank assurance products work?
So the bank assurance is a concept that needed to be understood. I'm not sure we fully understand it as regulators, and whether the customers also fully understand it. But what we have is that we have a situation where banks now are having these in-house kind of brokers, and there's this Chinese war, and it's that Chinese war that brings problems. And I think if it is porous, then it becomes problematic. If it is not, and we ensure that the Chinese war actually does stand, then on the Commission side, we see that that is not a problem at all. But it was that understanding to try and ensure that what is happening on this side is not necessarily influencing that a customer will cross to the other side. And I think our interactions, especially with your bank, where that you provided that assurance, and we were good with that. But it is going to be on a case-by-case basis, because we would not necessarily say just because Stanbic has done this, that will be true for other banks.
Yeah. And maybe just some comments from a banking perspective. Some of the issues and complaints that have come is there is a perception that you are a little harder on players that may fulfill that dominance position. There is more regulation for the bigger banks, which is a bit unfair for the smaller banks. The other complaint that has come out is the differences in how different regulators perceive issues. In short, are there proper handshakes amongst the regulators, which then speaks into the issue of the cost of doing business that you talked about. Yes. These are consistent concerns that come from the industry and from the banking industry. I don't know if you have any comments around that.
Yes, I do. And remember, we were coming from a command economy. A lot of these regulators that you see, except the Bank of Zambia, of course, which has been there since time immemorial, but a lot of other regulators that you see only came in the period 1990, maybe 2000, in the new millennium. Some are even being made now, all right? So everyone is trying to find their feet. The Commission is now just slightly over 20 years old. For the first 10 years, a lot of people didn't even know what the Commission was doing, but a lot of what it was doing was advocacy work, trying to get to know what the other people are doing, and trying to pick out what the competition issues are, trying to pick out what the consumer protection issues are in each and every sector. So our strategy has been to let's try and formalize our relationships with all the other regulators, which is what we've done. I think we have close to 9 memorandum of understanding, and that is to first understand what is happening in a particular industry. And as you understand what is happening in a particular industry, then you also raise your concerns, because some of the concerns that a regulator may not be looking at the way we would look at it. So handshakes are there. It will take a bit of time to ensure that we all are on the same platform and on the same level, so that we reduce the cost of doing business. But when you consider competition, and when you consider a company that we consider to be dominant, our law requires that this dominant person or this dominant enterprise has a special responsibility not to engage in anti-competitive behavior. And because of that, we tend to have, yes, an extra eye on that person with that dominance, because it's very easy for that person to exclude other companies that may want to enter into industry, and also it is very easy for that person to exploit consumers. Okay, and some of the things that happen, pay TV, for example, if it went up by $20, what would you do? Wouldn't you pay?
Would call the call center, Jen. Definitely.
You'd pay, most likely. You see what I'm trying to say, and that's because they occupy a certain level of dominance and market power that whatever they do, it's very easy to exploit the customer. But I'm not saying they are. All I'm saying is that it becomes very easy, and that is what a dominant firm does. So the bigger the bank, the bigger the enterprise, the more scrutiny you're likely to have. I think there's a saying there's a saying from Eastern Province that mutu okakura sule wa nkonya. You see what I'm trying to say? So it's the bigger your head, anything that flies will hit your head. So it's something that dominant firms ought to know, but that's not to mean that us as regulators are not cognizant of the fact that we would want to ensure we reduce the cost of doing business.
No, I'm sure we'll keep on engaging, but thank you for that clarification. Maybe just to quickly just raise two last issues. The first one is we're on an Anakazi Banking Online Conversation.
Yes.
Let's speak to the women as a special consumer group.
Yes.
What are the issues that come out to you as a commission? Because as a bank, we are very strong on that. We have got specific products, and we drive a strong theme around that. But from a commission perspective, what usually comes through?
What usually comes through is that we've noticed that when we go into the rural areas, it is the women folk that actually the ones that hold together the family, so to speak, and at the same time they're the ones that probably generate incomes within those families. And we've been going out as a commission under the RUFEP, Rural Finance Expansion Program, trying to raise that awareness that women folk should be onboarded onto the not just banking but financial services, and that would mean even mobile money, banking, and so on and so forth. We just want to ensure that a lot more have access to this. You talked about the Bank of Zambia relief, and I think just recently the president was also talking about the 30 million for the youth. But you see, all these things will bypass the women if they are not onboarded on financial platforms in one way or the other. So it is, for us, we've taken that kind of research and raising awareness to ensure that we onboard as many women as possible onto the financial sector.
Very, very nice to hear. Finally, Mr. Sampa, COVID-19 has come through, and you as a commission, you've seen the effects. Where do you see the future of competition and consumer protection after COVID-19?
The future of competition, we have not seen a reduction in the number of mergers, even though we went through this period of a slowdown and so on. Currently, we are sitting on about, the first quarter, about 30 mergers. So we see that probably that will continue. It will not really affect that. But I think when it comes to the consumer protection side, I think we'll see a lot more instances of expired products. You know, people are now a bit sensitive on what they want to buy, buying just the essentials, food stuff and so on. They are not buying the other things that you would ordinarily buy. And we are seeing a lot more expired products that are on the shelves. And so which means we have to work extra hard to ensure that those expired products are removed from the shelves and people are not exposed to them. So we see a rebound though by 2021. I think at that time we would have gotten used to the new normal, and probably we see the economy again expanding.
Mr. Sampa, thank you very much for making time. We are grateful for your clarifications, and this conversation, I'm sure, has benefited the viewers out there. And we will be calling on you surely.
Thank you very much, and have a good day.
Thank you. This has been Anakazi Banking Online Conversation, Episode 9. We hosted Mr. Chilufya Sampa, the Executive Director of the Competition and Consumer Protection Commission. Please look out for Episode 10, and thank you for making time.